Guys, it's been a minute. It's been a minute, but I am back with somebody who was very intriguing to me on not only the On the Margin podcast, but now kind of doing his own thing, kind of stepping into the world of building personal brand, macro insights, a Twitter following, all sorts of things. And I had to reach out and just chat a little bit about Felix here and how he's approached kind of um, this world. And in the past few years, this has become like such a massive space. And I kind of wanted to dive into how he kind of broke into this space, what he's looking for out of it, what are his personal goals, and kind of for other people that are on the younger side, because we're such just young, spry individuals, like how are people thinking about the space? Do you want to get into it? What are the benefits and drawbacks? So, we were just talking a little bit about the team that he has on his podcast, and how certain people are drawn to certain characters. And On the Margin is kind of a cool one because it's got three kind of, I would say, a range of what would be the range there, maybe 15 years between the three of you. I'm just guessing.
Yeah.
Something like that.
Yeah, that sounds reasonable.
But in general, on the younger side of things, I would say, and I've just noticed over time that we're getting more and more, as we go through time, we're getting more and more younger people that are able to really share some wisdom, and people are starting to trust them more than just some older guy that has been through the .com bubble or whatever. So why don't you just tell us about kind of how you got started with that podcast, or why you're here, and what are you doing here, man? What's going on?
Yeah. Man, I think I need to go back quite a few years to explain my journey, because it's a bit of a weird one. I'll just say that I definitely did not take a traditional route into finance or crypto or macro or anything by any means. I went to university in 2012 or so, and I studied business. And really enjoyed it, but was actually mostly focused on marketing. So I grew up in the mountains. I'm out here in near Vancouver, Canada. So I've been a huge, skier, mountain biker, hiker, pretty much just like anything outside, and been skiing, since I was very, very young. So it was always a huge passion of mine. And originally, I was actually planning to work in the outdoor industry, in the ski industry, ski resort industry. So, did my business degree back then, focused a bit more actually on marketing. And pretty quickly out of that degree, I started to work in an ad agency that focused on marketing for ski resorts, big manufacturing brands. And for a long time, it felt like that was my place. I had grown up in the outdoor industry. I had known a lot of people in the outdoor industry. That seemed to be my place. And it aligned really closely with my hobbies. But throughout that time, and probably started when I went to do my undergraduate degree in business, is started to get more fascinated with finance and investing. Once you come out of university, you're finally not totally broke, so you have a little bit more money. You start to think, what am I going to do with this stuff? I mean, all relative. It's very small amounts. But yeah, you start to think about those things. And started to go down the rabbit hole more so. I'd done some finance classes in university, so I had a very, very, very surface level understanding of things. Probably just if you think back to something like the Dunning-Kruger effect, just enough knowledge to get myself into trouble. So there I was. Felt like I knew some things, but really I knew nothing. Still don't really know nearly as much as what some people do in the world. But yeah, I started to get more into it. I initially started my investing, journey through the more traditional realm of value. I read all the Warren Buffett books. I read a lot of the value investor books. Some of those, really well-known deep value investors as well. And that really got me set off on the journey of, how to do investing the right way. I was never all that enamored with, the quick flipping, day trading stuff, get rich quick sort of ideas. I had fortunately gotten through what I felt like it was a pretty decent way to get into it, which was value investing. I still had some speculative moments throughout that journey. I learned a lot of lessons in 2016 was my first participation in a bubble when we had the weed stocks going off here in Canada, because Justin Trudeau is going to be elected and he was going to make weed legal. And so there's a lot of speculation in weed stocks. And that was my first experience with understanding buy the rumor, sell the news. So, you know, we got the day that that weed was legalized, and I was holding a pretty big bag of weed stocks and assumed, oh, you know, it's legal now. It's just going to keep going up forever. But little did I know that we had priced that entire thing to absolute perfection for that entire year. So, you know, that was the top, and we just went down only from there. So, yeah, you know, started in value investing, and then more so, I got a lot more into macro. The way my brain works, and this was quite similar to what I was doing in like the ad agency world, where I was like a brand strategist, and building brands is really being from more of a top down than a bottoms up type of person. So right away, once I got more into the macro world of things, I found that this idea of looking at things from a top down made a lot more sense for my brain than bottom up. Like even in university, I remember I got an A+ in macroeconomics, but I got like a C+ in microeconomics. So that just shows like how my brain works. Is micro is just like, it's just like killing me, and then macro, I'm like, this is awesome. I love this.
Yeah. Because like what microeconomics was like a lot of like debits and credits and balance sheets and stuff like that, right? Is that, if I recall correctly?
Yeah, it's also just a lot of like how like firms operate. So it's looking at like, you know, different like profit incentives of individual firms, and maybe just like a singular country trading with a specific good with another singular country. So just like very granular stuff. That's where like all those, you know, like supply demand curves and that sort of thing are very, you know, much more active in micro versus macro. There's still a lot in macro, you know, it's more like aggregate demand, aggregate supply, and that sort of thing. But just the idea of looking at the world from the top down just made way more sense to me. So as I started to, you know, learn more about macro through, you know, reading a lot of the famous books, you know, people like George Soros and the like, that started to make a lot more sense to me as an investment style. And that was actually what got me to get into the crypto world. Was I came at it through this macro lens. Is, you know, if you think about this like 3-phase journey that I've been in, where it's like started as a value investor, and then I got really into macro, that got me onto the whole world of, you know, what is the Fed doing in terms of like quantitative easing and printing money? What does that mean for the implications on the discount rate that is the bedrock of literally every financial asset? And okay, well, if we're manipulating the discount rate, that means that the valuations of a lot of companies are also skewed. And that got me down the route of discovering Bitcoin. So, you know, as going through the motions of learning all those different aspects of macro, started to realize that, you know, I start to understand the fundamental backing of ideas like Bitcoin and why it should exist. So that was sort of my personal investing journey. And then I got to this point in the last few years where I felt like my own personal development and education had far surpassed what was really on like my resume. And I had still not been fully working full time in finance in any way. So I decided to start doing the CFA. And I've finished the level 1 now, and, you know, might start on the level 2 and 3 and try to wrap that up. But it felt like I just really wanted to explore something that was a bit more, you know, just on the resume paper type idea versus, you know, obviously I'm a big believer in personal education, and you can get everything for free on the internet. But it was just this, maybe it was an ego thing, but it just felt like something I wanted to do. And so the last part of that journey that gets us today is that, you know, I was a marketer in that previous career, so I understand like brand building pretty well, and using social media as a growth asset. So I started to just, you know, write my thoughts on Twitter, and that, you know, started to get some traction. Got a couple threads that went pretty viral in terms of my macro views, and that actually got Will Clemente of like Reflexivity Research and like Pomps from there. They saw that thread and actually hired me as a macro research analyst for about a year and a half, where I was writing part-time some articles for them. And that actually, through being an analyst for Reflexivity, I was once a guest on the Margin, where Mike interviewed us. And pretty much a couple months after that interview, this was also during the time when I was writing the level 1 CFA, I reached out to Mike and I was just like, hey man, look, like I want to go all in on this industry of like, you know, crypto and TradFi together. So, are you guys hiring? And it just turned out that he was looking for somebody to replace him on the margin because he'd gotten so busy, running a
Yeah.
company. So yeah, that's the journey, that the 10-year journey that got me to where I am today. And here we are.
It's funny. I love like how life pivots around and
Hmm.
decisions and trying new things and stuff. And I feel like for you, if you're like inherently somebody who loves like skiing, I snowboarded ever since growing up, and
Mm.
there was always this dichotomy between like the rich people of like Breckenridge or Vail, and then there's like the lifties, which are like the fuck
Totally.
the system, like we're just gonna smoke and chill and party and like whatever. And I always thought the dream combo was like you figure out how to win money, but then you just kind of live the life of a lifty, right? Like without having to work.
Yeah.
It's like it's kind of the dream package, right?
100%. That's sort of been the evolution of my goal is,
Yeah.
there's this into like, the intellectual fascination of this big puzzle that is macro is something that just gets me very excited every single day. Like it's still, I'm still in disbelief that this is my job now that I get to do this, because for so many years I was just doing it on the side, after work. And
Yeah.
so it's just something that I just love to do, is to figure out that puzzle. So, there's that intellectual stimulation from it, but also this ability, like you say, to have that lifestyle of, I want to be able to ski a lot and be outside. Like that to me is the perfect balance to just like how, online and hone in on this world I am too. And my goal is, to have one complement the other for sure. I think that keeps a
Yeah.
lot of balance. Yeah.
Because I mean, if you think about like I've been getting into trail running a little bit, and I'm
Mhm.
terrible, but like there's something about skiing or trail running or being in the water or something that you need space from X, right? We all need space,
Big time.
especially if you're trying to originally think about this bigger picture, like the ability to go out and ski for 6 hours and just kind of enjoy that, but also while constantly thinking about this stuff has probably helped cementing some of your ideas, right? I feel
Yeah.
like I've just been trying to be like, dude, like sometimes you just get so in the weeds that you need to just go. Like touching grass is the perfect meme because it's like way more powerful than people joke about it. They're like going to touch grass, but that means like going to their couch and getting back on Twitter. Right?
Yeah.
Like that's
Yeah.
it's like not touching grass. So I feel
No,
like
it's so important. Like
yeah,
it's literally everything for me. Like in the summer, my main sport is mountain biking, some road biking too. And for me, yeah, just to go on a 2-hour ride or something, and just sometimes I'll even just listen to a podcast while I'm riding, and sometimes I just will listen to nothing and just kind of consolidate my thoughts out there. And I don't know, yeah, I would have definitely burnt out and left Twitter if I didn't have that outlet to
mhm.
just completely disconnect.
Yeah, the podcast in one ear, right? And then the other ear is free to hear people that are about to hit you or something
Yeah, yeah,
like that.
exactly.
Do you ever so I've been thinking about this more in recent. So I've done pretty well, and then like I've in the past 2 years like experienced, I would say like a roadblock of sorts where I almost feel like I know too much sometimes,
Hmm.
and I think about too many avenues, and it makes me do irrational things. And I used to just kind of be a day trader that worked order books, right? That's still what I do. But as I start to bring in the bigger world of macro, sometimes it hurts my execution because like there's this discrepancy between like, yes, maybe we're on this trajectory, but in the meantime, there's all of this like minutia and noise and news and all this stuff. So I've had trouble connecting the two. And sometimes I'm like, man, I just wish I never had that veil of like learning about anything. And sometimes I'll just be so jealous of the 401k bro that has no clue, right? Like
Yeah.
the only time they care about anything is like maybe they're like, yo, what's going on in the markets? And that's like, and then 3 weeks later, they're back to enjoying life and not thinking about it again because we're at all time highs. So you ever like regret, not, I don't know if regret's the right word because clearly this is the path you're meant to be on, but like you feel like there's so much information that it ends up being detrimental to your growth in a way, if that makes sense.
Yeah, yeah, 100%. I feel like I wouldn't regret it, but I just view it as part of this, journey, this learning journey where I feel like I've definitely gone through that in the past 5 years or so, where it just felt like I just needed to know as much as possible and try to input that into my investment or trading process as much as possible. But when I look at I forget the Bruce Lee quote, but it's just about like how once he started to learn martial arts, and it was like originally I just thought that a kick was a kick, but once I learned the art, he started to see all the different detailed minutia of what it takes to have a good kick, and then you get lost in the weeds of trying to perfect that kick. But then when you get through the other side, you actually really simplify things back down. And it's back to the kick just being a kick. And it's sort of just like the bell curve meme, where you
That's
start on
right.
the left side and then you become a mid curve,
That's
and
so
then you just
so perfect.
overanalyze, yeah,
Yeah.
and then you end up on the right side eventually.
Mhm.
And it's quite a simple place on the right side. When I've had um, you know the luck to be able to talk to a few pretty veteran traders, people who were trading the pits way back in the day, and they have a really simple process, and they've been trading for 40 years, and they hone in on the specific either indicators or way to track levels that they trade, and they just are able to ignore everything else. So I think
Mhm.
it's a work. If you want to get to that right side of the bell curve, getting into the mid curve is a required part of that journey. But yeah, you can get lost in it, and it can be really tough as you break through that for sure.
Yeah, I'm picturing that as like left curve is invest in the S&P 500.
Hmm.
Mid curve is super crazy portfolio of puts and spreading it out over different diversify whatever, and then right curve is back to just like 100% in like fucking big cap companies or whatever.
That's
Just
literally like me these days. It's like in the beginning, it's just like, oh yeah, whatever. And then, I had a phase where I was trying to, trade options, and I learned as
yeah,
much about options and like multi-leg options, putting on calendars and like iron condors and shit. And then I just realized that like I have no edge, and option
yeah,
markets are highly efficient, and this is a losing game. So now I'm back to just like, I have a core portfolio of like beta, and sometimes I'll add some long dated calls on there just for like a little bit of added oomph to the
yeah,
leverage. And
yeah.
that's all I use options for. Even though I tried to do the whole multi-leg thing, it just,
Mhm.
I don't know, I'm not smart enough to be able to find edge in that market.
Yeah, and that's just like I like the pit idea is like maybe these guys that are older don't have necessarily all of these, you know, well thought out fucking exponential age, like whatever, but they've peeled back their onion so well to where they have
Hmm.
this sharp blade that they just know like a market's a market and I can use this blade to win, right? Like I know insert any technology, insert any bubble, insert whatever, I can take this tool and I can effectively use it. And that's I kind of feel like I'm on that right side of the curve where I'm like I'm thinking about so many of the things that are hurting me and I'm
Hmm.
trying to just take them away, peel it back to like what got you here in the first place? Where am I trying to go? And yeah, anytime it's like the gods, the trading gods, whenever I'm trying to do something that I'm not supposed to be doing, they're like, "Oh, yeah, go ahead. Go ahead. Yeah,
Yeah.
go you know, go ahead and try that. We'll let you know via your P&L like, over time."
Yeah, yeah, totally. It's so key to find that process. I mean, look, the best traders in the world have like a 60% win rate. Like you're
Mhm.
never going to be right all the time. You just have to find a consistent process that allows you to minimize the downside, and then when your winners win, letting them run. And so I'm definitely on that side too, especially on like the non-fundamental side of things, like the technical analysis world is. I'm pretty much down to just looking at price and like maybe a momentum indicator, and that's it.
Yeah.
Once again, it's like getting back to the bell curve beam. Is like in the mid curve, you have like literally 50 technical indicators and
Mhm.
just like tons of lines, and then eventually you just get back down to like one indicator at best. And it's not
Yeah, it's like
perfect, but it
trying to
helps a bit.
I gotcha. Yeah, it's like you're trying to find some silver bullet, like layering on different indicators and it's going to create this ultimate signal that's going to be like a 95% winner or something. And I'm just like, even if you do, you could probably find that in a certain regime, but then the regime will shift. And
Mm-hmm.
even though your indicators might kind of be great for a certain volatile, like, VIX at 15, and things are just chilling and the ebb and flow is normal. Well, get up to a 30 VIX and let me know how that's gonna like run in different areas, right? Like, I've seen some environments in my day, and
Mm-hmm.
y- throw in that, like, what was it, August? We had that kind of growth scare, we'll call it. I
Mm-hmm.
mean, that just shook everything up there, and I'm sure you'd get some signals, but they might not
Yeah.
work.
Yeah. Yeah. Totally.
Um, but yeah, so over these, one of the reasons I was really interested in this is because I feel like I've talked to, and you've talked to a bunch of people throughout all of these years, and you have these kind of elders and
Mm-hmm.
legends of the space, and the people who have like gold ads on their podcast, right? Like kind of people who have seen it all or whatever. And then you have the X bros, which are 24-year-old meme coin traders who have been interested in this since like 2022, who also act as if they understand the whole world. Um, but there's this sweet spot that I'm starting to find where, these, maybe in crypto, it's these early cycle guys who have been beaten so badly and succeeded so much to where they've found this nice equilibrium to where they kind of understand the highs and the lows, and they're able to kind of deal with it. And then you got I think Tyler is a good example of somebody who's kind of a little bit on the, not older, but more experienced side, been
Mm-hmm.
around maybe through '08, kind of seen how the world works, been through these business cycles and all that. And there's this kind of sweet spot where they're tying together. And I think you guys have kind of found that space, and
Mm-hmm.
maybe that's why it slaps. So what do you think about that? And why is that the sweet spot right now? Or what is it about? What are the older people missing? What are the younger
Mm-hmm.
people missing? Why do you guys feel like there's that sweet spot in the middle?
Yeah. Yeah, it reminds me a lot. I think it was Stan Druckenmiller who talked about this, I believe. But he always makes sure that there's some young guys in the room at the same time as the
Mm,
old guys. So you want, the answer is that you want both, and you want them both for two different reasons. You want the old dude who's been who has the scars and has been through the battles, saw the crash of 87 and understands, has been through many business cycles and understands when things are turning to the downside and what sort of black swan events are actually possible. You want that guy in the room to keep you grounded and to keep you alive.
mm,
But that, those scars come at a cost of, you hear this from people that have been through multiple crypto cycles, especially people who are in like their second cycle right now. They're the people that are just, they can't hold the bag because, they were just decimated in 2021. So they
yeah,
just don't have that conviction anymore. So, they have that like PTSD from the last bear market. So you want the old person who's been through it, who can navigate that risk and keep you alive. But you also want to get in these young young people who are not as affected by the PTSD. They don't have the scars. They are blind enough to be able to hold, and I don't mean this in a negative way, but they have the confidence and conviction to hold because they're like, I'm gonna be rich. So you want both for two different reasons. Like when you look at Druckenmiller's firm, I don't think of specifically Druck who got them in AI. I believe it was a younger associate at the firm. And that would have been something that Druckenmiller would have probably, he's focused on deficit issues and big macro trades. But it's when those young guys start speaking up about this thing that
mm,
Stan has humility to listen and actually let them run with that, because it provides them the upside. So I think for any successful either trading firm or trading group or whatever, you want both. You want the veteran that keeps you alive, but you also want some of those young and hungry folks that get you the big gains, basically.
yeah, that makes a lot of sense. And the thing is, like, these what side do you think is more powerful? Because you have older guys are really good, and I got caught up in this in 2021,
Hmm.
2022. the narrative of a market crash or a great reset or whatever you want to call this is so sexy. And since there were occurrences like this in 1987, the dot-com crash, like '08, like there were these occurrences to where you're like, or COVID or whatever,
Mm-hmm.
it's so sexy and makes so much sense. Um, so that's very attractive. But then also the uh, um, outperformance, the everybody's going to need AI, the world is changing, growth is going to go through the roof, the cost of labor and overhead is going to drop, the efficiency is going to be really good. We're going to S&P 10,000. Like that's also in a sense attractive to young people. So why is it though that the doomer mindset like seems to prevail here? Like what's the what's looming that like why does everybody want in a weird way want a crash? You know, is it
Mm-hmm.
because they feel like they never got their piece of the pie, so they want to see the pain, um, but also don't realize that that probably involves their demise as well in a certain way? What do you think
Yeah.
about the kind of dichotomy between like the doomer mindset and the kind of growth one?
Hmm. I mean, at a really fundamental level, it's human psychology that we're we're programmed to overemphasize downside versus upside because that's just like a survival instinct is for
Mhm.
us to focus on how bad things could be, and then underweighting how good things could be. So there's a part of it that's instinct, and some of that's valid. You know, I'm definitely the believer that as long as it's if I were to just if I had to decide whether to have the old guy in the room or the young guy, I'd still probably go for the old guy because I truly believe that as long as you have a risk framework that keeps you alive, the returns will come. But then you look at some people that just bet the farm in 2021 and just got carried out. As long as you can survive and keep trading for another day and battling for another day, the returns will come to you. So I'm definitely more in that camp, but yeah, it's instinct, but it's also just it's our world these days of technology and media, and like I said, I worked in marketing and different content realms for quite a few years, running a lot of social media brands for a variety of companies, and it's doom or fear or any of these ideas does the best on social media. Just so that's gonna trickle into the investment and financial media landscape. That's gonna it's spearheaded by places like CNBC and that idea. And then it's spearheaded by people that watch The Big Short and think that
Great movie.
they can be the next Michael Burry. Yeah, it's a
But
great movie, but I somebody replied to a tweet of mine once. I just said there should be a disclaimer at the start of The Big Short. Something to just say don't let
yeah.
don't be a hero here. Like again, like it's you think of like a normal distribution, of probable outcomes. The vast majority are always going to be in the middle, and there's going to be a few tail events. You can make the Nassim Taleb argument of fat tails and black swan events being more probable than we actually attribute them to. That's probably correct, but it's so rare to occur versus what is more likely to occur in the middle of the normal distribution. So it's really difficult to not let yourself get caught up in that because you're fighting against your human instinct to overweight doom and underweight optimism. And that's one of the big heuristics that people just need to get through. And it takes time. I feel like it's that journey happens at the same time that you're going through that journey of just like educating yourself, and maybe you're in the phase of analysis paralysis. And if you look at enough data points, you can always try to you know come up with some fractal of a big crash that's about to occur.
Yeah.
So it just it just takes time to go through that, I think. And some personalities are just more predisposed to it as well. Like I
Yeah.
definitely am. I've actually surprisingly been, I would say, more of a cynical person than an optimist. And I've gone through phases of having like my doomer bear arc. I think a lot of my following has followed me on
Tumor
Twitter in the last like year and a half, where I've just been like incessantly bull posting for a
Yeah.
long time now. But I mean, from 2021 to 2022, I was the complete opposite.
Mhm.
So, I was the doomer bear every day.
Yeah.
Yeah. So, you're fighting your own human instinct, and it's really difficult. It's one of those many heuristics that we just have to overcome.
That's a great point. Like, as a person who came from me personally, I like left college with a lot of debt. I never had that much money. I played poker professionally after college. So like I was just either I had money or I was broke, or
Hmm.
I had money or I was broke. And there's this protective mechanism in my mind to where I have to take in all these doomer things. And
Hmm.
like I like when I hear a good narrative that makes a lot of sense, which there are in general. It makes me want to put on hedges. It makes me want to get scared. It makes me want to hunker down to avoid that pain that I've been through before. But if I was a person who grew up in a great situation, who had a family that was somewhat well off, and I knew I had this net behind me, and things have just gone okay, and like I got some money that keeps making all-time highs because it's packed away here and there, like I feel like they would have a little less punch, those
Hmm.
stories, and I'd just be like, yeah, I mean, war, recessions, yeah, like
Yeah.
look where we're
Yeah.
at, right? Like,
Totally.
and then there's like the bigger story arcs of like deglobalization, World War III, blah blah blah, and then we have like the mini story arcs, which is like the policy, um, this Fed person saying this, like this little blowout here of this market or whatever. Like even right now, even
Hmm.
with like this Israel Iran thing, I'm like looking back to I think it was April or whatever. I'm like, are we doing the same shit? Like,
Yeah.
hey guys,
Exactly.
we're gonna fire really hard at you at this time, and everybody's like, okay, like yeah,
Hmm.
like but again, they show on X, you see the raining down of 100 missiles and oil
Hmm.
spiking, and I'm like, and of course, like I'm super aggressively positioned in crypto, and everybody is like, this is perfect backdrop, and I'm just like, I, if you could sense it, right? Like over the
Hmm.
weekend, we're like, October, baby, let's go, and then
I know.
sure enough, like just missile parade on your bags. Um,
Yeah.
but these little story arcs and everything, you're right, like goes back to deep down, like I'm struggling with the swings of it because
Hmm.
I still think on the big arc things look great, but on these little ones, dealing with those along the way, I'm like, I question myself, am I missing
Yeah.
something, am I wrong, I'm down
Totally.
10%, so like I don't want to lose another 10 or 15% or 20, whatever.
Yeah.
um
And this gets down
oh,
to, like, I don't know, something that is, bugs me a lot. And I think any conflict on Twitter, in like financial Twitter and crypto Twitter, can just be boiled down to people having different time horizon
yeah.
perspectives of what their
Mhm.
I literally think every conflict and, like, fight about somebody's price call just boils down to different time horizons that they're looking at. So I
Yeah.
totally agree. Like you're saying, the long, like, I am just, I am stupidly bulled up on the macro, situation setup right now. Like, it's just, for me, it's just like the most obviously like bullish macro since like mid 2020. But that doesn't mean that we're just going to go up only every single day. Doesn't mean that we can just get a random
Oh, come
geopolitical,
on, why not?
crash. I know. Um, and so, you look at like some of the best traders on X are the ones that either hone in on a single time horizon and only trade that time horizon, or are able to think in different time horizons and trade those different time horizons. Being able to live in different time horizons and have trades on for different time horizons is probably one of the most difficult things you can do in trading. But it's something that I'm still hell bent on trying to achieve and try to work towards every day. Is I want to have my, I don't know, cycle, crypto bags where I just don't touch, the stuff I bought at like 20K Bitcoin, and just hold until, I don't know, probably the next time the Fed starts to hike rates again. Like that's stuff that I try to just let sit. And that's following my broad macro view. But obviously, that's the high time frame outlook. But then the medium time frame outlook could be very different. It could be the same, but it could be different. And so, you might have trades on for that time horizon, and then you might have, trades on that are just like a 1 to 2 day time horizon, and that might be completely different from the other two perspectives. And then you might be on Twitter talking about your low time frame trades because if I just got on Twitter every day and just said the same thing for the past 2 years, which is kind of a bit of what I've done, is just this
Yeah.
incessant bull posting. But I mean, yeah, like there's nothing really to say about the high time frame stuff. Like it doesn't change
Mhm.
that quickly. So you may end up talking more about your low time frame trades. And then now if you get people that come into this space and aren't aware of how that works, of having different time horizons for your trades, they just get overwhelmed. Like getting back to this analysis paralysis thing, is they just see this guy over here is bullish, this guy over here is bearish. Oh, but that guy was bullish, but now today he's bearish. Oh my god, he's a flip flopper, he doesn't know anything. But
Yeah.
he might just have different trades on for different time horizons. He might have just flipped bias, and that's okay too. But I honestly think like so much of this conflict just gets down to people not understanding this simple idea.
Yeah, it's a great point because people will quickly go through your profile and be like, "This doesn't align with what you said a month ago," or whatever, right? And as you grow too, I assume like having to even think about sparring with those people on a reply guy or like DM or whatever, it just gets to a point where you're like, you just don't do it, right?
Yeah, it's a shame because it incentivizes a lot of people to stop posting price
Yeah,
calls on Twitter, unfortunately. And then like you get like, I believe the reason why like crypto Twitter specifically is so hollow these days is because all the best traders don't post price targets really anymore. Like you don't have,
yeah.
I don't know, DGen Spartan and those type of people posting anymore. They're not active anymore. GCR is not really active anymore. He posted one price call and people have been ragging on him for months, even though he has a multi-year time frame horizon. It's it's like, why bother?
Did you watch that 1000X podcast with Chief
Yeah,
Zynga or whatever? That
yeah,
was great.
yeah.
Like
I love those guys.
I
Yeah,
that's a perfect example of like the content you need more of, right? Because you have again these tweener guys of Jonah and Avi, right? They're kind of young, but they've seen it all. They're in different spaces, so they can spar back and forth. And then they bring in this crypto guy who's just a fucking. From what I understand, he's pretty much a savage over the past, 3, 4,
yeah,
5 years or whatever.
yeah. He was
Someone
on the top leaderboard of Bybit for a while, for sure.
right, which is
Yeah.
which is super impressive. And the way he's able to I just love those conversations because I'm not necessarily looking for his call, but I like to see
Hmm.
how he thinks. And then I can take a little bit of that into how I think, right? And it's he with his they chatted about this potential run up into the election and then like a vacuum from Bitcoin, depending on the outcome, back into larger caps and stuff. And I was like, oh, like you're so right. Like the idea that you're going to be able to have markets sit here perfectly until the election and then you're going to be able to make the perfect choice, like that's just not going to happen like most of the time. Actually,
Yeah.
it might end up happening after this pullback. We might actually be there by the time, but um that's another good example of somebody
Yeah.
that like at least wasn't afraid to get out there and chat a little bit about it.
Yeah, and I respect that. And like,
Mhm.
yeah, Chiefing Zaw is one of the few people still putting up targets there, talking about being bullish ETH, and he's a contrarian trader, so it's you're going to eat a bit of mud in the meantime. But you know, I do think he has a process, a solid one, and it'll work out for him. I think just because he has a good process, that's really all you can ask for.
Yeah, the ETH people have been eating mud for quite some time. I've been a Bitcoin Solana guy for like, the last couple of years just because I spend a lot of time in Solana and
Yeah,
I,
same.
I I like to dunk on people just because I feel like I'm so lucky. Like
Hmm.
I understand like the amount of kind of luck and momentum and everything, but it's really fun to be on the right side of that rather than uh being on the ETH holder. And I actually think ETH is gonna have its move. It's going to at some point. The
Hmm.
thing is with tax implications for me and for you, like I have to always think about like rotation and how much you'd have to outperform to like
Hmm.
deal with the Californian taxes and stuff like that. So I've kind of like hands up picked my bags and
Yeah,
whatever. But
yeah,
it's this space is super interesting in crypto just because like man like price can drive narrative, narrative can seemingly drive price. It's just a big shit show.
it
So
really is.
for you, let's do this because I'm sure some people would definitely want to know what is your on just the market side of things, what is your personal 3 month and then we'll say 9 month plus outlook here? I mean, I'm guessing I kind of understand where you're at, but I will hear it from the horse's mouth. So.
Sure. Yeah. Okay. So here's where things stand. We have the labor market that is cooling. That is half of the Fed's dual mandate, the other half being inflation, and having stable inflation. So inflation has been coming down significantly, and in the past 4 or so months has been coming down. It's been disinflating quicker than what was expected. So that's been happening at the same time that the labor market has been normalizing, is what a lot of people are saying. That's sort of the way to say it, as opposed to fully cooling. And so, that's coming from a level where we were pretty much had the tightest and like hottest labor market almost ever. So, we needed to see that cooling. So we've seen that cooling occur. You can look at this in a few different ways. One of the best, leading ways to look at this is job openings and the job vacancy rate. So how many open jobs are left vacant at the moment? We were by far at our highest ever in like 2022. And we've come down to a much more normalized level. So, we have a vacancy rate of, got updated yesterday. I think it's at 4.8% now, roughly speaking. So we're in this realm where things are more normal. But at the same time, we've started to see some other indicators start to flash a bit more of maybe not a red light, but maybe like an orange light. The unemployment rate has accelerated higher, but it started from a level that is pretty much extremely low.
Mm-hmm.
So we're at around 4.2% right now. That's still pretty good when you look at the historical time series, but the rate of change matters a lot for the unemployment rate. This is what you see people talk about the SOM rule. That's just capturing the momentum of the unemployment rate, because generally speaking, when it goes, it continues, and it continues in a nonlinear fashion. So what you want to try to capture that rate of change before the actual exponential move comes. That's the idea. Now the issue is that the unemployment rate, there's two ways to see it increase. It's either just more people losing their jobs, like job losers, or you could see the labor supply increase for people coming into the population and not getting a job right away. So we've actually been seeing the unemployment rate increase more so because of new entrants into the labor supply, as opposed to people actually being laid off. If you look at actual layoffs right now, they're very low compared to the move in the unemployment rate that we've actually seen. So when I look at all of that and I see what the Fed is doing, where they're easing, they went 50 bips cut a couple of weeks ago. And that was because they don't want to see any other cooling in the labor market. And like I was saying before, the dual mandate of inflation is they don't need to worry about that for a while, at least the next year, I think. So that is happening. And so now you have to ask yourself, if the Fed is cutting because we're on the verge of a recession, that's not good for assets. So you need to decide and figure out, are they cutting into a recession, or are they cutting into a resilient economy that looks worse than it is because of these dynamics of labor supply affecting the unemployment rate? So this is where a lot of my focus has been on the last month is, when we got that really bad unemployment rate print in August, that sort of is what has triggered this whole, acceleration from growth slowdown to recession fears. So I've been really focused on figuring out, okay, we know Fed is easing now, but are they easing into resilient economy, or one on either in a recession or about to be in one? My opinion is that we're not in a recession, and that growth is actually starting to head higher. And we also have seen there's been some pretty significant GDP revisions that came out last week that have made it so that the last 2 years the economy has actually been significantly stronger than we even thought. So that baseline, and now you're throwing on this easing cycle. If we believe that there's no recession right now, that's just adding fuel to the fire, and we're going to head higher from here. So that's where I stand, and that's my big picture framework, is that we don't have a recession, but we're easing quite significantly. The next piece of that puzzle is understanding how much do we ease from here. So we got the Fed dot plot summary of economic projections from the Fed a couple of weeks ago, and they agree that we're going to see Fed funds get to around 3%, which is around where the neutral rate is. So they're not actually getting into any sort of like easing bias or accommodative policy. They just want to get back to neutral. Whereas right now we're above neutral, so we're in this restrictive world. So the discussion and discrepancy between markets and the Fed right now is how quickly do we get back to that neutral? The market is pricing in a very, very, very quick return to neutral. The Fed is pricing in a medium quick return to neutral. So I think as it stands right now, considering that I don't think we're about to enter a recession, the velocity of cuts is too quick priced into markets. I think the Fed is a bit more correct in terms of their policy rate path. But again, to understand the Fed reaction function from here on out, like you should not be looking at inflation prints like you have in the last 2 years. Focus on the labor market. We have the non-farm payroll coming out on Friday. That's what matters. Looking at the unemployment rate, that's what drives Fed policy from here on out. So with all of that, like I said, I'm super bullish. Like this is the best setup since I think mid 2020 for those reasons.
So I'll just kind of reiterate so we both, first of all, I'm bullish as well. I've already mentioned, but like we would probably agree that, yeah, there have been talks over the last year or two, layoffs by certain tech companies, like downsizing, whatever. But in general, with the amount of immigration, hot topic, that has come in, it's increased the amount of labor supply. So it's really looking at employment data from a little bit of a different perspective, because it's not layoffs, it's more of like an increase in supply. So you have that, and then you have both parties kind of now agreeing that is going forward, immigration is like an issue, right? So there's likely not going to be as much of an influx of, regardless of who wins, of like even more of an increase in labor supply, right? So that should theoretically like be another cap to the upside of that, right? So I guess that's beneficial for the argument. So inflation is theoretically dead for now. I know some people, going back to fractals and all that this is exactly what happened in the 70s, and yep, we know, we got a couple more months of low and then it's going to rip again because we're spending all the money and all that.
Yeah. On that point, like I do believe that's a possibility, but I'm just waiting to look at commodities. I'm waiting to look at oil. You cannot get what happened in the 70s. You cannot get a second wave of inflation with oil at $70. You need it above 100. So if you just want a simple leading indicator of understanding whether that's going to happen or not, just look at oil. If we're below 100, I just don't see that happening. We might get a tiny little bump in inflation, but you need oil to be surging to really see that second wave happen.
And I trade oil every day, and I don't see it, man. I don't see it with the ability for like America to take a lot of the oil creation like off the Middle Eastern table or whatever, and how I feel like have dispersed the impact of all of that. I don't even like we're seeing it now. There's like talk of Iran, Israel-Iran war popping off, and oil is like, I could pull it up right now. Crude oil is trading at $70. Yeah. Like it's down a few dollars again. So like to get to 100, like we're gonna probably have to have supply chain issues, like complete breakdown in communications, like issues at home. So I'd agree with you. Like I've kind of been talking to some people about that as well, who are very knowledgeable in the energy space, and we have tons of nat gas supply. We have oil kind of pumping everywhere. I think again, both parties are pro, pumping oil at this point. I think Kamala's changed her opinion on that whole thing to where like she's more pro whatever. I guess I don't know too much about fracking and all that stuff, but anyways, yeah, to me it just seems like the camp of disinflation over time, and as long like we're gonna get to that moment here, I suppose, where, to your point, it'll come down to just whether or not the jobs thing rolls over, right? Or at least slows down the rate of change, like you were saying. Right?
Exactly. And Yeah, to that end, I just want to add, although I do not see like a major resurgence in inflation, I do think the floor on inflation is higher now. So I do think that we have sticky inflation. A lot of that is service based inflation versus like goods inflation has actually been in deflation for quite a few months now.
Yeah.
But services inflation is sticky. I do believe that. So I do believe that I don't know how attainable that 2% inflation target is anymore. There's a lot of people that think that the Fed is soft giving up on the 2% target. I would be more inclined to agree with that. I could see us being in a bit more of a 3% target now, and that would align with what's been happening for the big macro geeks listening. Is that the neutral rate has, it's impossible to specifically quantitatively measure it, but there's a lot of inference that it has increased post COVID. So that means that we have a higher neutral rate, and so it would somewhat make sense for that inflation target to have naturally risen a bit as well. And by the Fed pretty much striking the Fed put on the labor market, they're letting that run a bit.
Mm.
That's sort of, they're never going to say, oh, we're done with 2%.
Right.
I mean, maybe eventually, but I think more so that's sort of the soft signal that we're seeing here.
Do you think there's any credence to the idea that if they were to go back below 2%, it's actually um, bad because it basically tells them unlimited spending doesn't fucking matter, right? Like, does that just incentivize more and more spending? Because if if inflation is just never going to be an issue, and we're going to go back to like 1.8 or 1.5 or whatever, and we're spending trillions and trillions and trillions of dollars,
Mhm.
it like just becomes more of like a debasement issue in the long term.
Yeah, I think it all comes down to what's happening on the fiscal side of things. So, I mean, what you're talking about is basically what happened between 2010 and 2019 is like we were in a period of pretty much soft fiscal austerity in a way. You had the Tea Party movement and those sort of things that were really keeping a cap on any sort of government spending. That's obviously been the opposite over the past 4 years. We're now running like recessionary deficits during an expansion. We had the fiscal stimmies whole thing during 2020. I truly believe that paired with the supply chain issues were the two main drivers of inflation. I'm not a huge believer in the Fed being able to actually create inflation on their own. I do
Mm,
not necessarily think that just lowering Fed funds rate will create inflation. It might lead to a tiny bit amount, but if you're looking at fractals of the 70s, you need those two things to happen. You need fiscal to just be going gangbusters. And you need money to be coming out into the actual Main Street world. You need these stimmies coming out and actually spending in the economy, because when it just happens through like something like QE, the velocity of money actually it decreases. So you
mm,
mean there's some people that believe that QE is actually deflationary in
mm.
that regard. So it's nuanced. I really do believe though that we need to see that fiscal side come. And obviously, I do believe that when you look at the election potential outcomes November onwards, they're both on the stimulative side of things.
Yeah.
Trump a bit more than Kamala, but both are increasing deficits. So maybe that's the answer to having a second wave. But when you're just looking at the Fed on its own, and they cut 50 instead of 25, that's not going to lead to the inflation reaction function that I think a lot of people are scared about right now.
So where's the point where you think the world capitulates? If let's just say everything is bullish, the setup is right, you are spot on. Where's the point where people, or do you think it will never happen? Like people will never kind of admit it, like where they're going to admit, like, yeah, unemployment's not a problem, growth's great, inflation's not an issue. Like, what would have to happen to get people to do that? Is it just like consistent bullish markets and a labor market that rolls over to where they're going to be like, okay, dude, Jesus Christ, like I was way off, or are they just going
Yeah.
to keep figuring out another way to kind of spin
Yeah,
the story?
it's mostly the labor market for me paired to GDP, and obviously like we've had an upward revision in GDP for like the last 2 years, so we're already starting from a higher level than what was expected. Atlanta Fed GDP now is still at like 2.5% for this quarter. That's if you're seeing a real GDP growth rate above
Mhm.
2%, like I just don't see how you can characterize that as recessionary. Now the big argument that the recessionistas will say against me is that that's because it's unrevised data, and the revisions will tell a different story as it comes. And they've been correct on the job side of things. We've seen some major downside revisions in the non-farms payroll. A lot of that is just due to attribution of like the birth death model, and basically just how they statistically extrapolate. Like they do a survey and they basically extrapolate statistically like the outcomes of that, and then as tax receipts come out throughout the year, they can refine that confidence interval to be more narrow and get an exact data point. But because of these like post-COVID dynamics in the labor market, there's been more noise and a lower confidence like interval in that data set. So yeah, even if we see the unemployment rate start to trend downwards sometime next year, like maybe we peak out at 4.5% and then start to roll down, which is roughly what the Fed is saying in their SEP. I think they're at like 4.4, and then to go downwards from there. So the problem with this is that if you're on the revision standpoint and perspective, like that doesn't come until like this time next year. So they can just keep banging the drum on revisions and saying, oh, even though the economy is booming and we're getting, we just got the ADP employment change today. So, it's somewhat of a good indicator of what's going to happen on Friday with the jobs report. And that came in way above consensus. But again, you could just say, oh, the revisions are going to bring that way lower. And I agree. Like, the revisions will bring it lower. Likely that's been the trend. But I don't know. At the end of the day, like it's just you got to look at all the data.
It seems like them yelling that. It seems like them yelling, the market is wrong. The market is wrong. Right?
Pretty much.
Like that's what revisionistas feel like to me. Is
100%.
like we all probably agree, but the game being played is like the data in real time too, right? Like,
yeah.
There was huge 800K revision or whatever in jobs, and like people kind of yelled at it, but then the market like kept doing.
The market did not give a shit. Like,
right. So, like what's
the market doesn't? The market doesn't move on revisions. So again, if you want to be here to be right, you can go be an economist. If you're here to trade and make money, then just focus on that. You don't necessarily need to focus on being perfectly right about everything.
Okay, and last one, crypto. How are you feeling about everything except Bitcoin? And then how do you feel about Bitcoin? I assume you're pretty bullish Bitcoin considering everything you've mentioned, but what about other things?
Yeah, super bullish Bitcoin for sure. Definitely in that like, the fastest horse mindset right now that, like Paul Tudor Jones talked about in 2020. It's the cleanest macro trade. Lynn Alden put out some research recently just looking at like correlation between different asset classes and global liquidity, and Bitcoin had the highest. Yeah, Bitcoin had the highest correlation, and that intuitively validates of a lot of what I felt. I look at different things than just global M2 is what she based it on. Even if you just look at like the financial conditions index or a variety of different things, like it is a clear trade against global liquidity, and that's what got me into crypto originally from that macro side of things. So yeah, super bullish there. The rest of the landscape is a lot more nuanced. I would say like half of the upside is going to be based on who wins the election, just because of the regulatory implications around altcoins. So that's hard. If Kamala wins, I think that's going to be a huge headwind against alts. If Trump wins, just pretty much any altcoin is going to be good to go from a regulatory standpoint, I think. So there's that. And then, if you ratchet down one notch deeper, I think we're at a weird spot with, we've had this like meme super cycle thing that's been like the main play at the same time that like, a lot of people are pretty disenfranchised by the VC backed, high FDV, low float type of coins. The jig is kind of up versus last cycle, and people are kind of sick of being dumped on. So I don't know, maybe that can make for a hated trade. I'm actually kind of believing that idea. Is to long the VC coins at this juncture, just because of how hated they are at the moment.
What's a good example of a VC coin? Like what realm are you looking? Not even like as a shill, but like what is a hated VC coin?
Probably like
you could argue is Solana a hated VC coin?
Yeah, I think it was, and it's funny because I just remember back in 2021, there was the everybody was looking at the unlock schedule and thinking, oh, they're just pumping right up into everybody be able to exit. But then it actually kept going up by orders of magnitude. And then, we all coined this idea of bullish unlocks.
Yeah.
And the reason for that is because a lot of people were actually trading locked coins in the background. So their cost basis was actually a bit higher, and some of those venture capitals had actually already realized their gains, so they weren't going to try and sell right away. So there's those dynamics. But yeah, that was like a last cycle one. But now there's less unlocks on Solana, but now we have this new set of ones. And the one that like gets a lot of hate these days is Celestia, just because it's it's FDV versus the actual revenue that it gains is pretty ridiculous. There's issues where like venture capital firms that are invested in there can actually stake their locked coins and actually get the emissions today. So that's not great. And it's come down like 80% or something. Like it had a pretty big run up, but it's also come down crashing. And so now we're at this point where all of that is well known. Nobody's unaware of these dynamics. So I feel like that could set up for a bit of a hater rally if we get the right, conditions in alts.
Interesting. Yeah, I think meme coins are also VC coins in a way. It's just all the cool kids that you follow on X are the VCs, and
exactly,
it's not like an official title. So it's all the same thing. They're getting wrecked by the people who are in and dumping on them over time. It's just there's not exact unlocks or anything. You just don't know, and like Ansem,
you don't know the call rounds, and
yeah, so it's just a different game. I think the meme I'm like somewhat in it, but I think that game is very cool, but like way deeper than people think, like as to how to effectively play it. So it's like it's just feels like absolute wreckage. How many people have become spiteful of this space because of the they're just not going to buy Bitcoin. Right. It's too fucking boring.
The ideal outcome for me for alts is that we get regulatory clarity around altcoins, where these alts can move from just being governance coins to actual, claims on cash flow. So I mean, closer to almost like digitized equity.
Yeah.
I think that would change the industry significantly. I think that would lead to people actually valuing these things, which might be a bad thing for some projects, like Celestia, that just have like are way inflated versus their revenues. But actually, like cash flowing operations, like I don't know, like Aave and those sort of companies that actually like make money, could be valued a lot better if we start to actually see those coins get a claim on the cash flow. That's the missing part. So if we see that change, I think it'll change everything for alts, and I think it'll trade a lot more fundamentally.
Yeah, I think if we got some apps or something that also incentivize usage, and people start to actually think like about the productivity and like the adoption and all that, it might bring attention back to that mindset of like revenue. Right now, revenue's fucking, who cares about that word,
Yeah. If anything, revenue's bearish because it anchors your valuation versus a meme coin. It's like, I don't know, $1 billion.
All right. Well, I appreciate the overlook there. It's been enjoyable for whoever out there is going to watch this. I think Felix is a great follow. You guys should be watching every week. You guys are doing it still on recording on Fridays, releasing on Saturdays.
Yep.
You should be watching the On the Margin podcast. I think you guys talk about stuff in a way that's approachable for everybody, but very nuanced, and you overlay some charts and everything. And I think it's important. I think one of the benefits of crypto is that it's getting a whole new cohort of people to give a shit about the world and their future and all of that, which had been blanketed over by corporate world and just go to work and shut the fuck up and you'll be fine.
Totally.
So I'm pretty optimistic about everything. I want our bags to pump. I want everybody in this space to like have their moment in the sun. It's a small space. Give us 10 trillion. Let us breathe.
Yeah, totally.
So I appreciate you coming on, and best of luck to you moving forward.
Yeah, thanks, man. I appreciate you inviting me, and that was a ton of fun. It's great to be on the other side of the microphone sometimes.
Cool. Yeah, for sure. Well, now we know you're a serious person. From the Blockwork side of things, we were all questioning it. No, I'm just kidding.
Yeah.
Awesome. All right, man. Take it easy. Have a great day.
Thanks.